Liquidity, buy-side liquidity, sell-side liquidity. This seems to be the buzzword for entire Twitter and YouTube, but actually very few know how to use it profitably. So in this video, we are going to discuss what is liquidity, buy-side and sell-side liquidity, drawn liquidity, internal and external liquidity, and lastly, and the most important topic, that is my 3-step process to find high risk to reward trades with liquidity. So let's get started. So first of all, let's discuss what is liquidity. Liquidity in the most simple terms is the sum of all orders limit and market at a specific price. If you are placing more orders at the specific price, the liquidity increases. However, if your order gets filled, the amount of liquidity on that specific price decreases. So this is basically the simple concept of liquidity. Now let's see where liquidity is present in the charts. So I drew a schematic for it. You can see at every turning point liquidity is present. Every point which is marked with an orange rectangle, liquidity is present there. Now you may ask, why is liquidity specifically present there and not on these legs and is present on these turning points? This is because market participants place bulk of their buy orders and limit orders at these turning points. So there are bulk of orders accumulated here. So most of the liquidity is present at the turning points. Furthermore, we will see which liquidity is really important and which should be used to take trades. So let's move ahead. So now we move on to a second topic, that is buy-side liquidity, and we will also be seeing an example here. Buy-side liquidity is the liquidity generated when sell stops are taken out. So let's look at this schematic. You can see this orange line was acting as a resistance. Price was constantly tapping it, and as it was tapping it, more and more people were placing short orders or were placing limit sells. So what did price do? Price shot up, took all the stop losses of people who were shorting here and then came back inside. This is basically called a liquidity hunt, or you can say manipulation. So your idea for shorting was right, but price manipulated a little as it liquidity hunted and then came back inside. Also, an important thing to note here is that the potential areas where buy side liquidity is present are previous week high, previous day high, equal highs, above daily time frame resistance, and above structural highs. Also, they are present in the fair value gaps, order blocks, and volume imbalances. So we will look at an example and things will get clear. You can see we mark the 4-hour high here, which is one of the zones where buy side liquidity is present, and we also mark the daily low where sell side liquidity is present. So price moved slowly towards the buy side liquidity, took these highs, and we can see we got a reversal towards the sell side liquidity. So if I was looking on this trade, I would have placed the short here with a stop loss somewhere around here and target at least these highs. So this is how you use buy side liquidity. I hope it is clear now. If you have any questions regarding buy side liquidity or anything in this topic that we are studying today, that is of liquidity, you can ask in the comments below. Also, the PDF document is attached in the description below, so you can download it and view it in your free time. Now let's move to our second topic, that is sell side liquidity. Sell side liquidity is completely opposite to the buy side liquidity, as it is generated when buy stops are taken, and in the above example you saw that buy side liquidity was generated when sell stops were taken. So I hope up till now everything is clear. So in the schematic you can see that this orange rectangle was acting as resistance. Price was coming in again and again and retesting this. Many limit longers would have placed orders here, but what did price do? Price came and took all their stop losses and then manipulated right back inside the range. So this is the manipulation or liquidity hunt which we call sell side liquidity. That means we have taken the buy stops of the people who are long. So let's see the potential areas where sell side liquidity rests. Sell side liquidity rests at previous week low, previous day low, equal lows, below daily time frame supports, below structural lows, and it also rests in the fair value gaps, order blocks, volume imbalances and trend lines. An important thing you might be seeing here is that I have marked some liquidities as external and some as internal. We will discuss this difference in the coming slides, but for now let's move to the example of sell side liquidity. You can see here I marked the previous week low, which is considered to be a place where sell side liquidity rests, and here I marked the daily high, which is an area where buy side liquidity rests. So when price came and took this previous week low, that is the sell side liquidity, and closed back inside, I took a long towards these buy side liquidity, that is the key daily high, and I got a profitable trade. I hope up till now everything is clear. I have also attached 2 more examples for every scenario, so you can see that and comfortably grab the concept, and if you have any questions you can ask in the comments below. So let's move to our fourth topic, that is potential drawn liquidity or DOL. People like to term it in different words, drawn liquidity, daily bias, but it is the same thing. It is basically your bias as to where you think price will go next, and then you take the trade. It is as simple as that, nothing to complicate. So let's go to the charts and see what drawn liquidity or DOL actually means. So here you can see on the gold 4-hour chart, my daily bias or the drawn liquidity is that these highs will get taken because they are the nearest liquidity zone. So let me mark a line here and let's see what happens when we play the price action forward. As you can see, these highs were taken and my daily bias proved to be right. So as you can see, these highs were taken. So now after these highs are taken, what do you think is the next liquidity zone or the drawn liquidity or the daily bias? In my opinion, if I were you, I think this liquidity goes next. So let me mark a line here. So let's move the price action forward. Now as you can see, most of the liquidity zones were taken here as we previously suggested. And now what do you think are the next liquidity zone? In my humble opinion, this would be the liquidity that we go for next. So let's move the price action forward and see what happens. As you can see, this also played out perfectly well. So I hope it's clear. You can take any chart example from any commodity, any currency and try and doing this. Mark your potential next drawn liquidities and see where the price goes. If you have a high accuracy, that means you are able to predict the market more accurately. So now let's move to our fourth topic, that is internal and external liquidities. So external range liquidity refers to the liquidity that is at the extremes. You can see here it is marked with the orange, then it is marked with the red. So it is basically the buy side liquidity that rests above the range high, or sell side liquidity that rests above the range low. And internal liquidity is the liquidity between this leg, including the fair value gaps, order blocks, everything. Now let's mark the external and internal on this leg, the red leg. This is the range low and sell side liquidity rests here. So external liquidity would be here and buy side liquidity rests here. So external liquidity would also be here on the top side and the bottom side. So internal liquidity here to rest in the middle of the leg, which is the fair value gaps, order blocks and everything. And you have to remember, market moves from external to internal liquidity. This was external liquidity, then we came into the fair value gaps, which was internal liquidity, then we again went to the external liquidity, that was the highs, then we again came into the internal liquidity. So market always moves from external to internal liquidity, then internal to external liquidity. It is fluctuating between these two, external internal, internal external. And if you want to further read about it, you can read it here and what are the types. Now let's move to an example to clarify all the concepts. Now here you can see we have a fair value gap on the daily time frame. Price came and rejected from this fair value gap, which means we were currently in the internal liquidity zone. So let's see what happens now. We rejected of this fair value gap and came and take this external liquidity. So where did we went? From internal to external liquidity. Now let's move forward. So now we pushed through it, pushed the price through external liquidity and again retested this fair value gap. So now again we went from external to internal liquidity. Now let's see what happens again. We rejected of this fair value gap and came and took this external liquidity. Are you seeing a pattern here? From internal to external again. Now let's move forward again. We pushed through the external liquidity and then here you can see we created a fair value gap and retested it. Now again you might see a pattern here again. We went from external to internal liquidity again. Now we rejected of this internal liquidity and came and took this external sell side liquidity. Again you can see we have created external liquidity. So you can see there is a pattern: internal to external, then internal, then external, then internal, then external. So the basic concept here that I'm trying to explain is that market moves from internal to external, then internal, then external. Basically it is ping-ponging between these two liquidities. So I hope everything is clear now. I have also attached 2 more examples which you can view in the PDF below. So now let's move towards the most important topic of this video, that is my 3-step process to trade liquidity. Firstly, I will look for my daily bias or my DOL. Secondly, I will look to go on the lower time frames such as the 30-minute, 5-minute and look for potential entries. Thirdly, I will look to make sure that my trade is between these time zones because these times have the most volume in the day and I want my positions to be in a time which have some volume in which I can execute. So let's move on to the charts and let me explain my 3-step process. So here you can see on the 4-hour chart on the Euro USD we took out these highs and we took these liquidity, and my next potential draw on liquidity or daily bias is these lows. You can see these lows were untapped, so I am expecting price to come and take these lows. So this is the higher time frame, and first of all my first step is completed, my daily bias is completed. So let me circle this level. Now our second step, as you remember, was to go to the lower time frame such as 30-minute or 5-minute and look for potential entries. Now let's go to the 30 and 5-minute. I prefer to take my triggers from 5 minutes, so let me come here. So when will I execute my trade? I will execute my trade when these lows, you can see these lows get taken out. When these lows are taken, I will look to short the market. So let's replay the price action and see what happens. So as you can see, prices is starting to break down. So I will look to place a short here with a stop loss somewhere around here and target the lows on the 4-hour as mentioned earlier. Also, I will look to cut the trade earlier if it reclaims the yellow level marked here. Like if it reclaims this level, I will look to cut the short. And I have a hard stop somewhere above here. So it's a 3 to 4 hour trade. Let's see what happens by playing the price action forward. One more important thing to note here is that price is moving in the New York session time of 7:30 to 10:30 AM EST. So all 3 conditions of my strategy are fulfilled. So I am taking this trade with high conviction. Let's see what happens. So as you can see on the 4-hour daily bias was correct. We took out these lows and the trade played out perfectly. We bagged a 4-hour trade. So I hope this strategy is clear. Try it out on different charts and time frames. And if you enjoyed this video, do check out this entire playlist where I am trying to explain ICT's concepts in a simplified manner.